Richard Raisman. I am a board member on the MIT Enterprise Forum of New York, and I'm standing in today for Jim Kleiber, our president, who is under the weather. So on behalf of the MIT Enterprise Forum, I want to welcome all of you to our program, which I think is going to be a great program. I'm really looking forward to it. I want to, first of all, thank Clifford Chance, who was able to give us this wonderful space today. And I also want to thank Steve Tucker and the law firm of Fitzpatrick and Hunt, Tucker, Collier, Pagano, and Aubert for giving us, for being a sponsor of the program. I also want to remind everybody we have a program tonight, but we also have another program on December 4th. Our next program is going to be the Startup Showcase, Innovations in Products and Services Distribution. So I think that ought to be a good program as well. Tonight's program is investing in aerospace entrepreneurship, air traffic management, unmanned systems, and commercial space transportation. And the chair of the program is Laurence Vigeant-Langlois, if I'm pronouncing that close. Dr. Laurence Vigeant-Langlois, she's a PhD from MIT in aerospace engineering. She's also, she is the Director of Business Development and Technology Partnerships at Sikorsky Innovations. And among her other, she's a pilot, an experienced pilot, and she's also a triathlete. So, Laurence, you're on.
So thank you, Richard, and thank you for joining us this evening. So we have a great panel assembled for the evening. Actually, everyone came from out of town, which is quite an honor here. And we have a set of panelists that is very diverse. We have folks from industry working on cutting-edge products, breaking new grounds and new markets, coming from commercial space transportation, from unmanned systems, from next-gen air traffic management going global, as well as from NASA and venture capitalists with a lot of affinities to aerospace. So I will ask the panelists to actually introduce themselves, give a short presentation about their organizations, and then we'll kick it off with some panel discussion with a few questions from me, and then open it up to the audience as well. So again, thank you for joining. And please, first we'll have Adam give a brief presentation. Yep, everyone should come this way, please.
No, we're going to hold on that.
All right.
No problem. Do the video in a second. Let me start off with asking how many people have heard of SpaceX? Is that, oh, wow, we're in the news a lot these days. So I will say SpaceX has had a wonderful summer. If you didn't see that news, this summer we became the first commercial company to dock we build rockets and spacecraft. We were the first company to commercially dock with the International Space Station. So our contract with NASA is to supply supplies to astronauts that are up there right now. And we did 2 of those flights this summer. So you probably saw a bit of that news. Let me tell you a little bit about SpaceX because it's fairly unique in this industry. We started in 2002 with our CEO. His name is Elon Musk, and he started a company called PayPal when he was a bit younger. PayPal was sold to eBay, and Elon had the vision that he wanted to get into 3 areas of expanding humanity, and it's a very big part of his life to do things that expand our reach and expand visions here for humanity. So initially he got into the internet. He thought that would change our world, and I think we've seen that happen over the last 10 years. He's also got an electric car company called Tesla. That company is based out of Palo Alto, and they're releasing the Model S this summer, which is a sedan-style all-electric vehicle. And he also wanted to, when he was younger, really wanted to get into the space industry, but always thought that it would take a lot of money to do that, and he never had that money until he sold to eBay, which was, he was in a very good position at that point. Most people will talk about the industry of rockets and space, and They will tell you it's an easy way to take a small fortune and make a less big fortune. Luckily, SpaceX has gone against those odds. Since 2007, we've been profitable, cash flow positive. Mainly that is because of a lot of good work that we've done really with partners that include commercial satellites. You can think of your DirecTVs or a lot of the large telecom communication companies that want to put satellites in orbit, but really we had a very unique and great partnership with NASA. NASA came to us in 2006 and said they wanted to, and it was before that we had some discussion about this, but they wanted to commercialize space. They knew the space shuttle was coming to an end, and they wanted companies to start investing in new ways of transportation to orbit. And so SpaceX stepped up to that challenge. In those years, we developed 2 different rockets. We started with what we called the Falcon 1 rocket. It was so named because it had 1 engine on the back end, and we've evolved that to the Falcon 9. It has 9 engines on the back end. And I'll show you some of that in a video in just a second. But our Falcon launch vehicle, for its first, our Falcon 9 launch vehicle, its first 2 launches have a spacecraft, a capsule on top. And it looks very much like an Apollo-style capsule. It goes into orbit and then re-enters with 3 parachutes. And so we proved this summer that we could do that, return the capsule to Earth and safely take things up to the space station and bring them back down, which is a great partnership with NASA because NASA pays a lot less. They have competition and many commercial companies that they have helped start. And quite frankly, we couldn't have done it with NASA. NASA has a lot of technology that we ended up using, most notably our heat shield. NASA was very smart on the heat shield for our capsule. We used that technology, modified it so it fit our designs, but that was a great partnership we've had. A little bit about the company. We started out with 6 employees in 2002. We're now at 2,000 employees, and we look for about 20% growth every year. We are a very fast growing company. So half the employees that are currently at the company right now weren't there when I started 2 years ago. So it is a very young company and new company, but folks get very excited about this area of exploring the stars. And for folks who have seen Elon in the news, his vision is really to make life multiplanetary. He thinks that's a grand vision. It doesn't necessarily happen at SpaceX, but it's one of those things he wants to enable. And when he looked at the market, early in 2000, 2001, 2002, sort of that time frame, he looked at the industry and he was trying to figure out, he wanted to get a mission to Mars. And at the time, the thought was to take a plant to Mars and have a green plant with the red planet in the background and sort of get people excited about going to space and going to other planets. When he did that, he found that launch was way too expensive. Here in the US, in 1980, the United States had 80, 90, and in a couple years had 100% of commercial launches happen from Cape Canaveral, which is in Florida, or Vandenberg, which is in California. We made some decisions which we as a country made some decisions which caused a lot of that business to go overseas. And so this past year, the United States had 0% of that. And those satellites are launching on Russian rockets, European rockets, and coming soon on Chinese Long March rockets. And so that business has left the shores of the U.S., and our intention is to bring that back here and have these launches here in the United States. So the grand vision is to start with bringing the cost of launch down. We're doing that right now in partnership with NASA, and let me show you a video of our facility and some of our recent accomplishments.
Falcon 9 rocket as NASA turns to the private sector to resupply the International Space Station.
Flying up in a human-rated Dragon is not going to be an issue.
Three, two, one. And liftoff. Liftoff of the SpaceX Falcon 9 rocket, launching Dragon to the International Space Station and returning cargo resupply missions to U.S. soil.
Yeah, it's a great company to work for. I will say I would think we want to hear from the other panelists, but I look forward to your questions afterwards. Happy to answer anything about the company and what we're doing either now or in the future. So thank you very much.
Thank you, Adam. And now we will have Mark Cherry, who's President and COO of Aurora Flight Sciences.
Thanks, Laurence. I think I'll bring this up. Yeah, no, you click out? Oh. Yeah. All right, while we're doing that, you just open that up. Left, right there. Just open that up. I want to say thanks a lot for having me. You know, I've had a chance to work for Laurence when I was in a previous life at Sikorsky Aircraft. And, you know, it's a unique pleasure to be here to represent the 450 men and women of Aurora Flight Sciences. And I want to give you a little bit of overview of that. And Laurence said we got to keep it to 5 minutes. And a little background on myself, I actually grew up in the Air Force. And one of my drill instructors told me that Air Force officers should be able to talk about something they knew absolutely nothing about for 5 minutes. And so since I know a little bit about this, I'm still going to try to keep it to 5 minutes without boring you to tears here. So what is Aurora? We are a combination of a UAS system called OEM provider, but we also develop aerostructures. And a little bit of background, Aurora Flight Sciences was founded about 25 years ago by Dr. John Langford. And he had a vision initially of being able to deploy UAS systems to really take care of a wide range of applications, but mainly geared towards environmental missions. High flying, being able to sample atmospheric conditions, be able to help out ocean going issues and things like that. So that was the initial vision and thought, and that has evolved over time. So we are still a relatively small company, I mean, compared to SpaceX. Again, 450 folks that we have, around $80 million, and we've continued to evolve. And we've done that by kind of building new stuff, kind of new prototype, new kind of neat things. And our unique challenge is really to take that from the concepts and the prototypes to something that is a freestanding product that's going to continue to grow and evolve. So again, what are we? Core technologies really is around composite structures, autonomous guidance, navigation, and control, and then vehicle synthesis. So actually we have what's called spheres, small fractionalized satellites that is actually up at the International Space Station. So maybe Adam, you and your team can help us out and get more stuff up there. So that's a great thing. But again, our special sauce is really around the combination of design capability in composite, as well as developing our own UAS systems. Wrong way. Okay, so some of the major programs and the things that we're working on. have worked on. I'm just going to point out a few. If you look at the top left, the Orion is going to be what we believe is the premier medium altitude, long endurance capability for the United States Air Force and DoD. We are developing that aircraft right now, driving to a first flight sometime in Q1 to early Q2 of 2013. And that will be able to fly at about 20,000 feet and be up for more than 5 days. And that's kind of a neat thing because there hasn't been that many aircraft actually pushing the bounds of endurance. And what we're going to be able to test is some of the actual payloads and whether they have the reliability and capability to actually stay up and deploy and provide value-added capability to the warfighter for an extended amount of time. On the other side of the spectrum, I'll call your attention to the Skate. Is a small micro UAV. I was actually out flying it yesterday, one of the best days I've had at Aurora, actually out in the field flying a UAV. And that's meant to be a deployable, less than 5-pound UAV that can go out and be able to stay up for over an hour, providing IR, certainly photo, and all kinds of payload package capability from a surveillance standpoint at any point in time. So you stick it in the backpack, you take it out, and it's actually made out of styrofoam. Pretty neat thing, and we're looking forward to deploying that also and getting that out. And then somewhere in the middle, we have the Centaur that we're deploying right now. That is an obsolete pilot aircraft, and I really believe that could be a game changer in terms of how the industry starts to adopt and becomes more comfortable with UAS systems over time. Because it has the capability to basically self-deploy in an FAA airspace regime with a pilot, but then get to a designated area and then act and feel like a UAS surveillance system. So all those things are some of the key things that we're working on. I'm happy to fill you in on some of the other ones that we're working on. But on the bottom, you have mainly some of the aerostructures projects that we happen to be working on from a composite standpoint. So just really quick, we have 4 facilities. I told you about 450 folks. We're in Virginia. We have a research arm in Cambridge, Massachusetts. We have 2 manufacturing facilities, one in Mississippi and one in West Virginia. And again, we believe that we are positioned extremely well to be able to take advantage of the changes in the aerospace. So what's next? So I thought I'd just send a couple things of what we're thinking about from a next standpoint. And this is going to be some context and maybe some of the questions have been teed up a little bit. So what are we thinking of next? What are the things that the folks are working on? Well, wouldn't it be cool if you could do self-deployment of UAS systems for long endurance situations out in the Pacific or the Atlantic? You think about the current applications that the Navy has at their disposal, usually rotorcraft applications because of the unique environment. But if you have unique launch and recovery systems that are able to basically take advantage of fixed wing applications, that might be something that's differentiating and provide a value. So we're thinking about that in terms of a wide range of applications from small to medium to large applications. And we think that this could be something that's pretty neat and could be a game changer. Now, I'm going to try something. Now, again, we're an $80 million business, so my videos don't even compare to Adam's videos, so I don't want you to compare this. So I just want to show you if this is working. Oh, let's go back. That it should be something in terms of the concept. So I guess you're going to have to take it at my word that essentially, it is how the systems work from a rail perspective in a Navy environment. So we'll just kind of move on. The next one is essentially going back to the fact low Reynolds number, high flying applications. One thing would be think about is what if you can have essentially a UAS system that could stay up for weeks at a time and could provide essentially low-cost satellites for a wide range of countries, wide range of applications. It's a way to get capability in places that right now don't have it. And so we're thinking about how we can deploy something that will stay up weeks at a time to low-cost, like regions like Africa, sub-Saharan Africa, to Asia, those sorts of things, and getting that aircraft up and deployed. What are the unique challenges that we have? As a small company, one thing that we like to do is use other people's money, right? And that's the best way to fund R&D. Now, the challenge there is how do you marshal and ensure that the things that other people want to pay for actually tracks to your technology roadmap? And I'm happy to talk about that a little bit. But that is a unique challenge, but something that we take advantage of. Using our money, because we don't have necessarily all the resources that a lot of other big companies have, we got to be very focused and use our IR&D very sparingly. And we made some big bets. Some have worked, some have not. And that's a unique challenge for, I'll call it the small to medium-sized businesses, and in terms of where you put those dollars. And certainly just the capitalization. Being a part of aerospace, long cycles, short-term investment horizons for a lot of folks that want to participate with us. And so that's also a unique challenge that we have to think about. So with that, hopefully that gives you a little context of who we are and what we're doing. And I really appreciate the opportunity to come and speak with you and answering your questions. Thanks.
Thank you, Mark. Great presentation. Next, we have Don Thoma, President and CEO of Aireon.
Thanks, Laurence. Well, thank you for inviting me here to speak to you today. We're a brand spanking new company called Aireon. We're really at the nexus of space, aviation, and communications. And I'll use the first 3 minutes of the discussion to just show you a video, because a video is worth 1,000 words, and talk to you a little bit about that in some more detail. But this will describe what Aireon's about.
From passenger to pilot, carrier to controller, the business of commercial aviation is on the verge of being transformed on a global scale, optimizing and enhancing aviation operations around the world. And it all begins here. Iridium is preparing for the launch of its next-generation constellation of communications satellites, Iridium Next. A special receiver on board will listen for signals from commercial aircraft worldwide, relaying them to air traffic controllers on the ground, enabling the first-ever space-based global aviation surveillance system from a visionary new company, Aireon. Today, the systems designed to track aircraft are entirely land-based and are deployed primarily over heavily trafficked areas. The ability to track data for remote, mountainous, ocean, and polar regions remains limited or non-existent. These global blind spots create inefficiencies and a world of opportunity. Powered by Iridium innovation and built on the world's furthest reaching network, Aireon will deliver a high-value service, providing visibility to all next-gen equipped aircraft across the entire planet, changing forever how we fly the world's skies. For aviation monitoring organizations around the world, Aireon will allow them to monitor and more directly control aircraft with limited capital investment, lower costs, and opportunities for innovative, value-added services for their customers. For global carriers, Aireon will leverage investment in next-gen monitoring equipment, allowing them to safely and quickly climb to their optimal altitudes, access new routes that take advantage of favorable and changing winds, and safely create more flight lanes, allowing opportunities for passing, easing of congestion, and more aircraft to use the jet stream. All of which will save carriers billions in fuel costs, improve operational efficiencies, and allow more on-time arrivals, critical to their business success on a global level. Aireon will also have a significant impact in the reduction of aircraft carbon emissions and will enhance overall the safety of modern air travel. Aireon is designed to meet future global infrastructure demands and promote harmonization of air traffic management everywhere. From passengers to pilots, airlines to aviation monitoring organizations, with Aireon, the future of globally optimized aviation surveillance and safety is taking flight.
So hopefully this doesn't loop back over. But Aireon is a classic example of necessity breeding innovation. For those of you who know Iridium, or the company that is the founder of Aireon, we bought the assets of the Motorola Iridium system back in 2000. And We've grown that business to about 600,000 customers on that network, about 400 million in revenue. But if you roll back the clock to 2006, when we had to start thinking about redoing our network to launching the next generation satellite system, we were about 260 million in revenue, but still growing at a good clip. But what we knew is that we had a one-of-a-kind network, one that provided a service, a capability that really couldn't be provided in other ways. Small, compact devices that can provide connectivity anywhere in the world, in the 90% of the world that doesn't have a cell tower associated with it. But again, the trouble was, how were we going to finance a $3 billion system at that point to deploy a next generation system in 2015? Well, one of the thoughts that we had is use the backbone of this network, this communications infrastructure that's around the globe that can see any point on the Earth, to host third-party payloads, to have some other mission other than our core commercial communications mission that could use that network. Our thought at the time was that the Department of Defense, the government organization, would take on that opportunity and use it for one of their missions. And we looked at lots of them, 30-plus missions under a variety of paid studies and efforts for a whole series of different organizations in the government. But it became clear to us back in the 2009-2010 time period that there was no way that government organizations could move at the commercial time pace that we were on to launch our systems in 2015. So we came upon this concept through some study work that was going on over in Europe of ADS-B reception by space. Now, as you've seen from the video, ADS-B is the new standard for air traffic surveillance. We're deploying towers across the whole U.S. It's mandated on all aircraft in the U.S. and in Europe. So it's an investment all the airlines are currently making, and that the FAA, NAV Canada, NATS, all the air traffic control organizations are making. So the concept of putting a device on every one of our satellites could in real time monitor air traffic and provide better services in areas that are running very inefficiently became a very attractive idea, and as we looked into it, it grew into something quite significant. Obviously, we came across, and part of this panel discussion is going to be about how to finance ventures. We had to think of how are we going to finance this incremental investment. We had already committed to invest $3 billion through both a credit facility that we had in place and cash on hand that we had raised from a public offering. But we still needed other partners in this. And we went to the strategic partner route to develop the system and fund the system. So in June, we announced a joint venture with NAV Canada, the Canadian privatized provider of air traffic control services, and Iridium to finance the venture. And in some ways, and hopefully this will come out in our discussion, the role of strategic partners in aerospace ventures became very important, because I would say that NAV Canada and Aireon were really two companies in the right place at the right time with the right background and culture to make a transformational capability like this occur. And it really turns this into something of a jump start, first customer, someone who knows how to use the technology to achieve the kind of benefits that gets the airlines excited on the fuel savings that they're going to achieve by a system like this. So it is truly a unique and fun opportunity. I look forward to sharing more with you during the discussion. So thank you.
Thank you, Don. Next, we have Courtney Graham, Associate General Counsel at the NASA headquarters.
Hi, everyone. How are you? I got it. Good. Got it here. Awesome. Got it. Okay, thanks. And I really appreciate being here tonight. This is neat. It's great hearing the first three speakers, because each one of them I know NASA's part, in getting them where they are, which is really cool. But, actually, so hopefully we can tie some of that in, because the things I'm going to talk about tonight are not aeronautics, or our support for the development of the next generation air traffic control system. We will talk about the ISS. I won't talk about SBIRs in particular. And I won't talk about the Commercial Crew Program, which is one of the things I spent a lot of time working on with the SpaceX folks. But what I wanted to talk about is value of technology investments to NASA and where we're going right now, and why this is really important to us, and why we're looking for new technology to come in. I love this chart because this basically says that where we are today, in order to have a colony on Mars, we would need to land equipment with an equivalent mass of 12 space stations. And that's really expensive. It'd be really hard to do right now. So the thing is, we're actually looking at technologies that we're going to need that haven't been invented yet. So we're telling people, hey, here's this stuff that we need. Go out and invent that so that we can buy it from you. So this is sort of an overview of our map right now. So we're at the very early stage where we're really looking a lot at the commercial sector to try and develop these new technologies. We're trying to encourage people to develop dual-use technologies that can be useful for our mission and also have a place in the domestic commercial area, looking at robotic precursors and game-changing technology development. We're looking not at incremental changes, but actually revolutionary changes. A lot of the stuff that's going on right now, a lot of the rockets out there are still using Apollo era technology. We need to get new propulsion systems. We need to get new life support systems. We need to have new battery technology and that sort of thing in order to achieve some of the stuff that we're looking at. As we move forward, we'll move into heavy lift capabilities and actually getting that mass off the Earth, and then hopefully we'll be looking at human exploration of other systems. Okay, you love this chart, right? This is actually all the stuff we need. NASA did a space technology road mapping exercise, and we found 14 buckets of stuff that we need, 14 technology areas that we're actually interested in, and I'm hoping you'll post these slides so everyone can see them. And then for each one of these, we found, we broke it down into sub-areas. So if anybody's in any of these businesses, please look at our website and come talk to us, because this is the stuff we are looking for today that we know that we need. We're looking to do these through partnerships. Partnerships are a big part of what NASA's doing. SpaceX is one of our key partners right now. We look at them as a partner and not just as a contractor, because we actually have a mutually beneficial relationship with them, and that they're helping us achieve our goal of advancing domestic space capability to bring launch services back to the United States and reinvent the domestic launch industry, and we're helping them develop a commercial business. We're giving them a destination for the vehicle that they want to build. We're looking for win-win-win situations where we can help NASA, we can help the private sector, and we can create value for the taxpayer and advance our domestic economy. Now, you were promised SBIR. This is kind of all I'll say about SBIR itself. But the thing is that SBIR is a great way to get your foot in the door if you want to be a government contractor. And as a new company or as an investor, that's an important decision you need to make early on. And if you want to be a government contractor, you have to decide what kind of government contractor you want to be. An SBIR company has a different relationship than somebody who has a commercial item, let's say, or somebody who's in an R&D type of environment with the government. And so that can cause you to have to make decisions about how you set up your accounting systems, how you set up some of your internal governance systems. It makes a big difference in how you manage your intellectual property portfolio. So it's important to think about that early. But NASA has a lot of information about our SBIR program online, so I'm not going to repeat any of that tonight. Look at the technology areas that are available, and then take a look and see if that's actually something that would fit your particular business model. I wanted to talk just very briefly. People don't realize how much small business we use. Actually, and this is just a sample of the small businesses that participated in the Mars Curiosity program. So we had small businesses at every phase of that actually bring technology to the table to help us get Curiosity on the ground. We do prize competitions. That's an interesting area where we actually support the development of commercial space. A lot of technology that has come out of in our lunar lander area. We've also had lunar regolith competitions, and that sort of thing is an innovative way to kind of help people work on something that they're already working on and maybe win a prize. We've worked with the Google Lunar X Prize folks right now, which is a prize that is for the first commercial vehicle to land on the moon. The Flight Opportunities Program, this is actually going to be kind of my takeaway message for you guys. I'm going to talk about two things, flight opportunities and the ISS National Laboratory. Now, the Flight Opportunities Program is an opportunity for businesses to actually get their technology into a microgravity environment in order to advance the TRL, the technology readiness level of their technology. It's free. What we've done is we've actually let contracts to suborbital providers and people who run parabolic aircraft. in order to keep their businesses going, to use NASA as an anchor tenant. And because we don't use all the capability that we've bought, we bring commercial companies in to use that capability to advance their technology. Once that technology is advanced, then we actually have a program to get experiments and research and development on the national lab. The ISS National Laboratory is a way to actually advance the development of technology in a microgravity environment. You are able to get a free ride to the ISS, you get free crew time, and SpaceX will bring you back. So it's a great way. We're trying to develop an ecosystem. We're working with folks on payload processing and ground systems. We're working with folks on actually having suborbital and orbital capabilities, and then we're having a destination where you actually can develop a customer base for those folks. So if you actually can get a commercial market going where people need microgravity facilities, then there's Bigelow Aerospace is actually developing an inflatable on-orbit facility that can be used as a lab. Then you essentially have basically developed the whole ecosystem, and you're not looking at the chicken and egg kind of problem. So that's what I spend a lot of my time working on at NASA, and hopefully we can talk about that some more, and maybe how some of your projects might fit into that. So thank you.
Excellent. Thank you, Courtney. Next, we have Stuart Auerbach, General Partner at Ampersand Capital Partners.
Thank you. Thanks, Laurence, and thanks for having me here at the meeting. Bit of an unusual forum for me because I will tell you right up front that through the firm that I've been a part of for the last 25 years, we actually haven't made an aerospace investment. I've been in the private equity business for 25 years. I've looked at quite a number of opportunities in the area, and I'm going to talk a little bit about our industry and sort of where it is today and some of the issues that exist for the private equity or venture capital industry. I'll move back and forth between the two. Then I think later on we're going to talk about sort of where the best opportunities are for trying to get this as a source of capital. I thought I'd start out with just a little bit of a primer. This may be really elementary for some folks in the room, but just to start out in terms of understanding a little bit about the business of private equity. The private equity is an industry where we manage pools of capital in 10-year limited partnerships. Most of the capital comes from limited partners that are things like foundations, endowments, public and private pension funds, funds of funds, banks, investment banks, insurance companies, and the like. And it's important that you understand that we are really agents of those folks with a mission. There's a lot of competition within our industry among the different private equity firms for trying to get capital. And frankly, we compete with other sources of investment for the folks that are our limited partners. And so our goal is to try to find strategies that offer the prospects to our investors for an attractive risk reward, and that we have sufficient lead flow where there's enough opportunity that we can expose ourselves to and to choose investments. And find things that play to the strengths of our particular firm, whether it's in terms of investing in a particular stage of investment, a particular industry, or a particular style, such as there are firms that are very operationally oriented. In terms of the funds themselves, you typically see our industry broken down into a number of sectors, including venture capital, which are usually early to seed capital to early stage businesses, growth equity, which is a little bit later on companies that are already out with products in the marketplace, the leveraged buyout market, which goes from companies of as small as $10 to $20 million that are profitable all the way up to billion-dollar enterprises. And then there's a sector for distressed investing. Each of these sectors, there's a different profile in terms of the stage, the expected returns, the loss ratio that's acceptable for companies within that portfolio. So in terms of just looking at where typically the money goes, I just grabbed some data that comes from Preqin, I believe it is, for in Q3 of this past year, where the different types of funds in venture capital and buyouts invested their capital. As you can see, aerospace by itself doesn't actually fit into the chart. I believe it comes into the industrial space. In the buyouts side, I think you'll find that it's far better represented than it is in the venture capital side of the world. In VC industrial is only about 2%. Most of the venture capital money goes into internet, software, healthcare, and telecom, as many of you know. This is a bit of an exhibit about the problem that we've got in looking at sort of the last couple of decades in the venture capital industry in particular. And if you take a look at the chart, you can see that the returns were pretty darn healthy as you went through the 1980s into the 1990s. The lower line is median return, so that's the median return for the industry. The upper line are where the top quartile funds ended up. And as you can see, these are by vintage year, so it's not the returns that occurred in a year, but it's for a fund that was raised in a particular year. And keep in mind that that then would take it 10 years out into the future. That's one of the reasons you don't see anything for the last couple of years, because at that early stage in a fund's life, this kind of data is not very meaningful. But you can see the really strong peak in performance in the venture industry in the late 1990 vintages. But then when you start to get to 99, 2000 and going forward, you see a substantial drop-off in the return for the industry. And I'm going to come back to this again in terms of talking about risk and reward, because that's really what our business is all about. And this is a chart that was put together by Preqin, where they tried to sort of associate the returns for that same period of time with the risk that's being taken. And obviously what you're looking for ideally as an investor is to try and find a place where you're taking a little risk and you're getting a large return. So that would be the lower right-hand portion of the way that of this chart, the way that it's constructed. If you look at the venture capital side of it, that's the small green dot that's right on the left axis there. You can see that you've got very high risk and on balance for the median over this time frame, a negative return. That's not a sustainable place for that part of the industry to go, and something will change as a result of that. The big blue dot in the center is the buyout industry, which is on balance a much healthier, has been a much healthier industry over this course of time. So there's a lot of discipline that occurs within this market. I mean, every 2 or 3 or 4 years, folks in our business go out to raise another fund, and how we've done in the past is critical towards raising the next fund. So what we focus on is try to manage the risks. We don't look for no-risk situations. We're looking for ones where there's just a very good balance between the reward that we can get for the amount of risk we're taking, and we do a lot of things to try and manage risk. And one of the things that I'll mention later in terms of advice is to figure out what you can do with your businesses to manage the risk side, to try and move that equation more on the side of being favorable for getting it financed. And the other thing that's the cold hard truth of our business is the only reward that counts for the people that provide the capital to us is financial return. So there's no strategic benefit for most of those folks. There is no sort of jobs benefit and social benefit. While that's all important to them, at the end of the day, they make their choices about when they re-up and give money to a firm based on what the track record is for prior funds. So what happens over time? Well, after you get a peak like we had in the late 1990s, and then performance such as that we've had in the early part of the decade, you see that the limited partners speak with their wallets, and the fundraising market has declined significantly. Over time, I think this is going to be really healthy for the industry. The number of firms that sort of grew up in venture capital from the early 1990s even to the late 1990s was huge, and it's now down by almost 50% over the course of the 2000s. So we're starting to clean out the folks that weren't sort of doing a good job in managing that capital, and frankly funding more companies or more ideas than should have been funded for the quality of those investment opportunities. With regard to the aerospace industry, I'll try and take it a little bit more specifically. I think the risks that we have to deal with and the considerations in making an investment here, you've got the technical risks, everybody knows about that. Time is a huge enemy for particularly early stage businesses. You develop a company with a burn rate, and until you start generating cash flow from the business for revenues, that all has to be financed with equity capital. You have regulatory hurdles. In many businesses, the whole size of the upfront investment, market risk, in terms of sort of how big is the market. In many of the segments of the aerospace market, we're talking about relatively small niches. The profitability, so when you're successful, how good is it? And then finally, what are the options for liquidity? How attractive is it for these companies to be turned over and to provide return for the investment? Now, these risks aren't unique to aerospace. If you take a look at the life sciences industry, the biotech industry, you find very similar risks. So the real question that comes up is, whether or not the investors that are going and putting their capital into this space are really getting compensated for the risks that they're taking here. And I'd argue that, at least historically, that's a real question mark. I just tried to spend some time thinking about a number of privately financed investments in the aviation industry that I've come across over the past 10 or 15 years, and just put them up here. And I will tell you, without sort of going into details about them individually, very, very few of these returned any capital to the folks that financed them. And that's a problem, and that's not sustainable. And we need to fix that in order to basically make this a segment of the industry that is now attractive to the, at least the private equity business. So I think that's all I'm going to do for now.
All right, thank you, Stuart. Well, this is quite a set of diverse perspectives here. So we have companies addressing different markets of the aerospace industry in its broadest sense. We have companies at different stages in the company life cycles in terms of including pre-revenue, pre-profit, middle market type companies. We have investors and customers and suppliers who have certainly varied exposure to that aerospace industry. I'll tee it off with a first question here for the panelists and ask them to share their opinions about what are some of the key opportunities and key challenges that they are faced with. And I'll start it off with whoever is willing to take this on first.
Start off, I'll kick off.
All right.
Thank you. So I really resonate with what Stuart said, because we've been going through that process for over 5-6 years now at Iridium and into Aireon of how to raise capital in a business like aerospace. And Iridium is a little bit different, and it's a service business, it's a commercial telecom business, but Aireon certainly fits the bill. I mean, just look at all of our presentations, right? There's one common element, and that's the government, right? The government is the biggest customer for the aerospace industry. So whenever we talk about any of our businesses, there is some government element to it that is a required partner, a required customer of that service, and adds, in some cases, stability, right? An opportunity. In other cases, especially in a startup environment, it adds uncertainty, a long time horizon, right? Because it's a very stepwise process. I mean, certainly Courtney can talk to this, but there's budget cycles, there's funding cycles. It's a time period that makes venture capitalists run away in horror when you talk to them about a program that's going to be launched 5 years from now and go cash flow positive 8 years from now, and that's you lost them on the first sentence that you said. So. In that case, the opportunities that we saw certainly is it has to, for investment at least, has to be strategic partners, people who do see the other value associated with it. I mean, NASA is clearly a strategic partner, with a SpaceX in that case. Nav Canada is a strategic partner with us, willing to put up their money, put their signature on a long-term services contract, helping us develop it in a way that they can use it. All those types of things are incredibly important to developing a new business in aerospace. Now, having said that, I do think there's opportunities for new ventures, new capabilities. But if you look at the history, and being down in the DC area, you see this quite a bit. In fact, I think Aurora, to some degree, started in that way. There's great opportunity for people who have a niche technology, a capability that isn't being addressed by the larger or even the mid-size aerospace companies that can move quickly, because in those cases they can move very quickly to seize that opportunity. A lot of times they're bootstrapped, right? They're bootstrapped by either their own money, or angel investor money, or by SBIRs and grants to fund the research. And that process, again, takes a long time to get through. But once you get through that, there's also a well-worn path to success and to an exit from that matter. It's an ecosystem, as Steve has talked about, for small companies who come up with an idea, they build a small business base, it gets a little bit bigger, there's an urgent need in a war or something like that that really drives the demand for it. All of a sudden, the mid-sized aerospace companies buy them, and then guess what? The big companies are trying to grow as well, and they buy the mid-sized companies. So I've seen several, just in the past 10 years, partners of ours go through that cycle. So the opportunity and the exit path is well worn in the aerospace industry, and especially in the defense industry itself.
Yeah, I think I'll add to that. Maybe. All right, that's good. I agree with everything that was said before. What I'll throw out there is a unique opportunity and challenge from an aerospace perspective. Has to do with really the way that you work through the regulatory environment. One unique opportunity that we have at Aurora, we believe, is with our UAS systems, is being able to sell those to international governments. Certainly, the U.S. government is extremely big and critically important to our business from a foundational standpoint, and for that matter, where we see is the key growth opportunities for us. But we see the ability to expand and sell our products overseas as a unique opportunity. The challenge comes is, as the regulatory environment sits right now, a UAS system is classified the same way as a ICBM, and that's a problem. Right? I mean, if anything can deploy 500 kilograms, more than 300 kilometers, that is under the same regulation as ICBM. So that's a problem, obviously, in terms of being able to do export. And I think we have an opportunity as a nation to really kind of challenge it and look at the way that we look at the ability to sell technology and export technology overseas, from not treating all countries the same way to some sort of segmentation. I think that would actually help the industry, but it's a challenge right now. But I agree, the U.S. government, and that's a unique thing with aerospace, I think space in general, that you have to have at some level U.S. government or a link to U.S. government opportunity as your core foundation.
And I'll actually offer maybe the government side of that as far as challenges, is that we're being asked to be more commercial. We're being asked to be faster, quicker, stronger, all that kind of thing. It's put us in a position in a constrained budget environment in order, basically we're being asked to put 5 pounds of, beans in a 3-pound sack, which then puts us in a position to ask our commercial partners to take more risk and provide funding as well. SpaceX is a really good example of that. We co-funded some of the development of their vehicle, and at the time they didn't have any guarantee that there would be a contract at the end of that. So they took a tremendous risk that NASA would continue with that program and take it through to the end. Hosted payloads is an area where the government has become very interested because launches are tremendously expensive, and if we can leverage investments that are already being made on the commercial side, that's very interesting. Now that creates a business opportunity at the same time, but it means that other folks are not going to be quite as strong if the government shifts in that direction. And the very large aerospace contractors, your beltway bandits, as it were, they like the way it is. There's a way that people have been doing business for a very long time. And so it's a real challenge trying to get a culture to change in the light of fiscal realities. And so it's something that I think that is both an opportunity and will be a challenge for both industry and the government in the coming years.
I think the opportunity is defining yourself as something quite different than what the industry is doing today. It's pretty challenging when your competitors are behemoths like Lockheed Martin or Boeing or Northrop Grumman in the government sector. And SpaceX now finds itself as getting to be a larger concern, where we're finding that our competitors are things like Russia and China, and it's a pretty amazing place to be. But the regulatory environment is a very interesting one. We build what is essentially an ICBM, and so the export from the United States of rockets is really not going to happen. But where it gets really hard for us, and I think that it's a significant challenge, is our spacecraft providers. Parts are built around the world, and bringing folks in to have technical discussions in the United States becomes very hard from a regulatory standpoint. And a lot of the changes that could occur, every time this debate comes up in Congress, it immediately, somebody raises their hand and says the word China, and that rockets will go to China, and the debate stops. And unfortunately, the regulatory change, a very measured conversation in Washington could be just changing things from just the very laborious paperwork intensive approval process to electronics. And we've got a lot of that ability today that we could change some of these regulatory issues, but it's a significant challenge for this industry.
In terms of sort of looking at sort of industries that, or segments of the industry that I think could be attractive and also might be attractive for folks in the private equity business, I think one of the models that's worked very well in a number of other industries that I think is applicable as well to aerospace is to be sort of one step back in the supply chain and to actually be a partner with some of the large aerospace companies that are seeing growth in demand, particularly with the global expansion in the commercial as well as the private aviation industry. So I think that there are companies that are in the component supply, material supply, specialized manufacturing capabilities. I think those businesses have really good opportunities, and I think they have attractive profiles for the private investment world. I think in the services area, it's also been a relatively healthy spot within the aviation industry. So I know that there have been a number of FBO organizations that have gone through the private equity ownership phase that have been very successful. I think the whole subject of improving in-flight data and communications for both the commercial as well as the private aircraft, I think that's a very good opportunity. There's quite a bit of money being spent, a lot of interest in keeping people in the air connected to what's going on the ground. Management tools, things like whether it's flight training, flight planning, weather services, I think those are all areas that have interesting opportunities. These aren't the big, sexy opportunities, frankly, of the Aireons or the SpaceXs, but I think it's a very good, solid business opportunity. The risk-reward profile in those spaces, I think, is a far more attractive space for the private equity industry. I'm not sure that it's quite the space for companies in the smaller scale, but there is going to be tremendous investment in infrastructure in some of the developing countries. I think the amount that's going to be spent in places like China, for instance, to develop a larger private aviation infrastructure there is going to be large. And they may, in fact, choose not to do it as a government. They may actually look to use private industry as the contractor in order to put in place a lot of that infrastructure, take the advantage of all of the work that's been done in other parts of the world, like North America and Europe, for instance. So whether it's operating airports, air traffic control, some of the certification aspects of it, I think that may end up being a pretty interesting area for the private companies to get involved with.
Great, thank you. Those are great insights. Almost 3 years ago, I assembled a similar panel to have a similar discussion. And at the time, I had been involved with the MIT Enterprise Forum for some time. I had a background in aerospace and started making phone calls and thought I would assemble a panel of aerospace venture capitalists. Now, for the reasons Stuart mentioned, I realized along the way that that seemed like an oxymoron. And so I would like to ask the panelists now to share their experience in raising funding and to speak a little bit about who are the most likely investors, what are their main interests, what are the most important criteria that they might have, and also to share, of course, their success stories from the 3 companies and then from the investment perspective as well with NASA and Ampersand.
I'll start off. At SpaceX, we were very lucky. Our main investor is Elon Musk, and it was because he was a visionary in this space, and so he wanted to change this industry. He started the company with his own funding. We did a number of venture rounds with some of the specialized venture capital folks that he was involved in. But then, quite frankly, our company took off when NASA partnered with us. And so it was very much a government venture at that point that really kept SpaceX, brought SpaceX to where it is today.
From an Aurora perspective, so as I said, the company was founded by Dr. John Langford, and it really was kicked off by him and his investment, and a similar story, but friends and family, that sort of thing, to get it kicked off. He was able to get incremental investment from actually private equity later, and that actually helped in terms of funding the capital, and then certainly there's debt that's used also to fund working capital requirements. The other thing is a small company, the link to strategics. So talked earlier about the fact that there's some very well-worn exit scenarios to the large guys, that the big guys buy the little guys and that sort of thing. So with that, there's also a link to getting capital and being linked in with a large strategic buyer. You know, the Boeings, the Lockheeds, the Raytheons, those sorts of areas to fund capital. But really, our main source has heretofore been private funds, whether it's private equity or individual private funds coming in.
I'll start with Iridium before I talk about Aireon, because it is quite an interesting part from a venture capital perspective. Back in 2000, they were getting close to deorbiting the Iridium system. Motorola had put Iridium into bankruptcy at that point. Actually, the debt holders put it into bankruptcy at that point. Motorola was threatening to deorbit the whole thing. A gentleman by the name of Dan Calusi put together what I'll call a ragtag set of investors that basically came up with a capital commitment of $133 million, to fund Iridium. They bought the assets for $25 million, 66 satellites, another 7 on the ground, 2 launch vehicles that happened to be laying around, everything. I mean, we had warehouses full of printers and Iridium jackets and everything you want to think about at that point. We also got a $18 million, I believe, or $20 million credit facility from Motorola, and another $11 million credit facility from the bankrupt Iridium at that point, because they still had $200 million in cash that was going into it. So we scraped together all the capital we could to launch the business. So we had 0 customers. Our first customer was the U.S. DoD, who had made a substantial investment in their own private network on the Iridium system. So we had 1 customer at that point. And we basically kind of assembled a team and turned the switch back on, dusted off all the equipment, and started the business. So back in about 2003, we just kind of cleared the trees, went cash flow positive when we were kind of counting nickels to make payroll, because we didn't want to make another capital call on our investors. Now, those investors were a mixed group, right? They were venture capital firms. They were investment funds of Saudi company that was actually a previous investor in Iridium. There were some private equity investors out of Australia. Some of the Brazilian ones dropped out. So it was a changing mix of investors at that point. But we cleared the trees and we kept going at that point. As I said, the good thing at that point, we were growing at a good clip. I mean, the business was really picking up. We were diversifying away from the standard handsets that you saw. So you had a lot of things to build a business on. So we thought, naively at the time, 2006, that, well, what we do is go out, raise some private equity at that point, keep growing the business, go public, and raise debt. It's kind of a standard approach to financing the business. Well, after 40-some investor presentations to private equity firms, et cetera, Lehman Brothers goes under. And we enter into a situation, point in the history where, as you all know, I'm sure many of you know, it's very hard to raise capital at that point. And the investment vehicle that we found, because we kept getting approached by things called SPACs, Special Purpose Acquisition Corporations, which were basically companies that raised money to go buy a company and bring it public. So it was a public entity shell, if you will. So we merged with Greenhill Acquisition Corp at that point. Basically achieved all of those things in one fell swoop. $400 million in capital at the point. We became a public company, traded on NASDAQ, and off we went. So at that point, We were able to get a lot of the infrastructure contracts lined up at that point. And again, looking at the government role in this business and the international aspect of it, in the decision to build our next generation satellite, there was a competition going on between Lockheed Martin and between Thales Alenia Space of France. And their designs were very, they both met the requirements of our next generation system. A little bit different, but they met the performance. The price was roughly the same. France came together with an export credit package that was very attractive and well suited for a satellite-based system. Very patient capital, construction loan during the phase, long-term pay, 5% interest. I mean, all those types of things. Export-Import Bank of the U.S. was working with Lockheed, but again, they were moving much slower in that process, and it would have been a year at least till they were ready to come together with a package. When we have a network of satellites and they have a certain number of spares, they're going to die off at some point, so we needed to begin building our next generation system. So we basically financed the rest of the system with a $1.8 billion credit facility from a group of 9 banks, backed by the Export Credit Bank of France, or Export Credit Organization, really insurance. It's not a bank, credit financing insurance. So off we went with a fully funded plan for next. So turn the dial ahead a couple of years to Aireon, where we find this great idea. It looks like a solid business. It's going to be a monopoly for air traffic management over the oceans, because there's no other system to do that. And we put together an investment prospectus and started looking at infrastructure funds, right? Financial funds. As I was saying before, we stopped very early on the venture funds because we knew that we were out of sync there. But even the core infrastructure funds that invest in airports and different facilities like that, it was too risky for them as well at that point. So we were looking at strategic partners, industrial partners who'd be building payloads and ground data processing systems or avionics for ADS-B. And there was interest there, but you could tell it's so far out of their sweet spot that they just kind of stayed away from it. But as we started talking to a company like Nav Canada, which was privatized, they were very familiar with the use of ADS-B. They're leaders in the ADS-B. They provide services to the airlines on a pay-for-service basis over the North Atlantic, the busiest oceanic corridor. And they said, this will work. This will save them $400 a flight in fuel across the North Atlantic. You charge a third of that as a fee. And all the airlines in the room, you're looking at that, and I said, yeah, we do that. They said, well, this makes a lot of sense to us. So we were able to structure a deal with them as a strategic partner and a customer, right, that said, we will put money in as we reduce the risk and the technical side of the program going forward, lined up with all of our infrastructure capital needs. And in addition, they signed a long-term services contract that will also allow us to go raise debt to finish off the rest of the system. So very strategic. It fit their business well. They're a non-share private company, I guess, in that point, but they're not owned by the Canadian government. So they viewed it as, this is core to our business. A, we don't want a commercial entity with a monopoly over the way we run the business. But they also said, what this will do for us is give us another source to reduce our fees to our customers across the North Atlantic. And other parts of the Canadian airspace. So it was really a win-win situation there, and very visionary by an organization that 15 years ago was a regulator basically for the Canadian airspace. So that's maybe too long of a story for you, but the story of how we finance these two ventures.
Great. Well, why don't we open it up to the audience here to start asking questions? I don't know. Great. We have a microphone and can go around, and that way we can also have better hearing of that on the recording.
Skipping away from angels and family, right now, if a government agency called the SEC will finally finalize what they promised they would do already and deal with crowdfunding, I would hazard the guess if SpaceX did a crowdfunding program on the internet that you would, at whatever price you thought it was worth, you'd have people from around the globe wanting to do it, not just because they think it's potentially a good investment 15 years from now, but they want to play in the dream. Kickstarter raised, some company wanted $500,000 to do a new kind of watch. You invest, but you don't get any stock or anything. You're just putting your money in as a contribution to get this company started. They raised $7 million in how many months? So, they only wanted 500,000, as I recall. So for some of these stories that tell a dream, like SpaceX, I think that that's a perfect funding source. When you're talking about, Iridium, and all we remember is that it was a great idea, but a very expensive telephone, it doesn't have the same sex appeal. In history, it was government, Ferdinand and Isabella, who financed Columbus. But after that, it was stock companies. The Dutch East Indies companies, the British stock companies that developed the New World, and in a sense led to the Industrial Revolution soon after. The government-sponsored program from Spain found gold, and eventually Spain went broke. But the stock companies, where it was done privately, built the Dutch and the British empires. So I argue for some of these dreams should be crowdfunded. Anybody want to address that?
Actually, there's some crowdfunding initiatives going on already. Actually, Planetary Ventures, which is a new entity that is, their long-term goal is to mine asteroids. But as part of their asteroid mining, they actually have some advanced imagery technology that they want to put in orbit. And so they want to do space-based imaging. And they've done I don't know if they did it through Indiegogo or Kickstarter, but they've essentially raised money for folks who want to crowdsource the building of the first couple of prototypes of this thing, because the idea is that scientists and engineers could actually use the equipment on orbit and actually have sort of a timeshare arrangement for the sensing capability. So people are thinking that way already.
So far, they put up their money and got nothing for it. It's just people actually put up their money just to say, we want to see this happen. They have no vested interest. They don't get anything out of it except the participation. And that's, to me, for what's happening right now with this whole move to space, everybody grew up on the same comic books, and we all have the same dream. So it's a great opportunity. I don't know how much money your example raised, but if that was through Kickstarter, the people who put up the money got no interest in the company. They just got a certificate saying thanks.
We do a lot of citizen science that way too. We get a lot of value from people who are interested in our mission.
So I've spent my whole career in space or telecom associated with space, as I think most of us have, except 3 Air Force guys on this side of the room as well. So I've always wondered if other industries have as many nuts as the space industry has. I don't know about you guys, but you run into these people that have ideas that are, either they're certainly dreamers. Some of them are just bad ideas that you should just run from, and others are good ideas, but they're not fund. They don't have the funding to achieve it, or they're kind of misplaced in that basis. You have certain people, that have lots of money to do that, right? Elon is a great example, but he had the smarts and the ability to turn it into to a business. You have Bigelow Aerospace, who's no longer, he may be still kicking around out there, but you got Richard Branson, right, who's invested lots of money in space itself, and we'll see what happens. But so you got the big guys who put lots of money in. There's a lot of small companies out there. We have 300 partners. Some are very big companies at Iridium, that is, or sell Iridium services, and have turned these phones into a whole bunch of different devices. Some of them are Honeywell and companies selling avionics, and a lot of them are small companies that have an idea, and they're industrial ideas. They're selling a device that's tracking, a driver for Halliburton, right? Small company, they jump started, and I saw them fight their way to success, right? Trying to raise the capital and get it through that initial phase. Now they're doing great. They're one of our biggest customers. But I think there's dangers in crowdfunding because they're going to fund these dreams that don't really have a real business. For other companies, I think it's a viable source because they've got a good value proposition that you can articulate, and they've got customers to prove it, but they need, a little bit more patient capital. And
I don't think we need guardians of people's decision to to invest in something they like. I agree with you. The Wright brothers may have looked like a bunch of nuts to their neighbors, but somebody liked them, or maybe they did it all themselves. I would take the risk of saying that somebody's idea to have a stairway to the moon or a cable to the moon is a great idea for somebody to put money into. I don't know, and I don't think that you know, and based on the venture capital industry's actual results over the last 2 decades, only a few of the VCs have actually exceeded anybody's expectations in terms of a return on their capital. So if they have as many failures as they have, why tell me that you have to protect the common guy? Let's democratize investment, and if somebody wants to, instead of putting down $100 the other night on what's the big lottery thing, let them put $2,000 down on somebody's wacky idea. I mean, why do we want to protect people from making stupid investments when we don't even know which ones are stupid and which ones are terrific? So that's my vote.
Yeah.
Democratize it, especially in this area where it has a lot of sex appeal for people.
One of the things you mentioned was how do you differentiate one fund from the next when they're all trying to do the same thing? And I think my perception as an outsider is many people all chase the next Facebook or whatever, and they act like lemmings, and that's why the returns go down. Would someone in the room who's financial, you or whoever, why don't you start a 20-year fund? That'd be different. You set the expectations different. Say, we're investing in long-term things. That's what we're in for. If you don't want it, fine. If you don't, fine. It seems to me if all these things are 10-year, there's an opportunity to be different.
Yeah, and it really comes down to the limited partner base, and it's really not the issue of the general partner or somebody being there that would establish the fund that could have those kind of objectives. The bottom line is that the sources of the capital just aren't interested in making those kinds of investments. They're trying to manage pools of capital. It's a pension fund. They've got to have liquidity at certain points of time. They've got to have certainty of return for that portfolio in aggregate. And at the end of the day, their decision is that they don't get compensated for taking the kind of risk for basically tying capital up for that duration in those kinds of opportunities. So at the end of the day, it really does come back to sort of people with the money not having the interest in financing that kind of a profile of an opportunity.
Laurence, would you mind telling us what you do, maybe with some specifics at Sikorsky?
Let's see, I guess I could comment on a small portfolio of equity investments we have in technology companies. They are done for strategic reasons. Of course, the financial opportunities and financial, I guess, statements and planning do matter, but certainly we will look at companies that could help us demonstrate differentiating technology, and we're setting up partnerships and perhaps preferred partnerships that involve investment will matter, but we do certainly look at a variety of partnerships, whether they include sponsoring university research, and I'll include partnership in the very broad sense, whether it includes doing joint development agreements with small, medium, large companies, whether it involves bidding to get contract R&D money from the U.S. government and foreign governments as well, whether it involves partnering with foreign entities in order to establish a local presence and industrialize internationally. And then, of course, there's the whole M&A part of the spectrum where we might consider setting up joint ventures, 50-50 partnerships, or minority investments with varying levels of future options regarding the investment. And whether it includes a full acquisition. So we do quite a variety of things, obviously. And yes, we are considered a strategic partner in that sense. We certainly might consider that, whether it's downstream of our business or upstream of our business, whether it's into the supply chain or developing further into the vertical toward the customer base.
Insofar as you're the one venture fund, could you just run through 3 or 4 of your venture investments?
So I don't know that we would call them venture fund specifically. Sorry, I interrupted you.
No, that's what I was wondering, whether your, so to speak, portfolio is up on the internet like a venture fund would be.
So we do not consider ourselves a venture fund. We do not have a fund allocated to making these kinds of investments. What we will do is, if we do have partnership opportunities that we wish to champion and mature, we will propose them to our company management, and opportunistically, and where it makes sense and where the returns expected are appealing, then we will proceed with negotiating and hopefully closing on a deal in the whole spectrum of the partnering. In other industries, there are several companies in the telecom and healthcare and many other industries that do set up funds, whether it's $100 million dedicated to investments, and in my experience, they will have varying levels of expectations in terms of the financial returns versus the strategic returns. Some of them will be completely financially driven, even though they belong to a large, potentially strategic partner. They might try to draw into the various resources, functions, explore alignment with their parent. Others will be very strategic and really look for, again, differentiating technology or accessing new markets, etc.
What size deals?
What is the full question?
What size deals have you actually concentrated in terms of how range of amounts of money that you've invested in?
I don't have any information to share at this point about that, except what's been in the press, and I can't speak to that, sorry. Jacob, you have a question?
Yeah, hi. 2 questions, actually, both kind of prompted by your comments about partnering as well as investing as a large aerospace and defense supplier. So the first one has to do with Don's comments about a path to success for small and medium innovative companies in the industry being through partnership. Contrasting pretty sharply with the slide that you showed of the history of privately financed aerospace defense companies, which is so littered with poor outcomes. And I guess my question as I look at this industry is that just a harsh reality of aerospace and defense, much more so than other industries, this notion that a path to success which involves a company growing to become an industry leader as an attractive and an interesting entry point for private financing, that path to success is almost impossible. Where companies like SpaceX, perhaps Palantir in the defense industry, a multi-billion-dollar company now, and perhaps Garmin on the commercial side are the exceptions that prove the rule. Or is it the case that if you have a good strategy, if you have a good business model, if you have the right business model, there is a repeatable way to become, to actually be a successful new entrant into the industry to the level where you become an industry leader. So, is Aurora, are the cards stacked against Aurora or not? As you guys, you have the Orion system, which could be the next Predator, right? And you could become a first-tier supplier. Right. Are the cards fundamentally stacked against Aurora or not in this industry in a way that they're, that's different from other industries? Maybe I'll pause there. My second.
Yeah, I'm going to answer. I'll start with one of the questions that you asked, which is there something unique about the investments in this industry that leads to the landscape having what seemed to be a disproportionate number of companies that were not successful for the investors? And I think the discussion earlier about crowdfunding and the passion, in fact, that which brings that capital is also, I think, the Achilles heel of many of these companies. And I think what happens is a lot of things both get sponsored by management teams and entrepreneurs, as well as by people with some capital to put out based on passion as opposed to the disciplines of making sure that it really was a well thought out business opportunity. And I think what you'll find with many of those that I had on the list up there, if you really now do the post-mortem on them, you see some really fundamental issues with what was being attempted. They were very bold, visionary, but fundamentally the chances for those to be successful, if you really looked objectively and gave it the right business analysis, that was very small. You mentioned Garmin. Garmin is a very interesting success story, but I think you'd be hard-pressed to call it an aerospace company today. If you look at Garmin, what I think they did that was key to their success is they actually found a way to take technology that they developed initially towards aerospace, and they were able to figure out other markets that was going to be really attractive. And in those markets, in fact, today are probably generating, I think, 80% of their revenues. Aviation is a very small piece of the total puzzle there. And so they developed something with a passion for aviation, got it going, were able to manage how much capital they needed. So they didn't go and raise $1 billion to try and go after this opportunity. They basically nursed it along, got it up to a scale, and then figured out where else to take that technology that had the ability to continue to drive financing. And now they've got synergistic R&D that they can, when they apply it to one of those sectors, they can bring it across others and make good use of it.
Yeah, let me address the question around Aurora and where we see prospects and whether the cars are stacked against us. I think the unique challenge, and you said the word scale. There's something around scale that a company needs to get to be a viable competitor in a market. So. One thing I tell my team, we aren't going to be going out to challenge Boeing and Airbus in large commercial double aisle, single aisle. That's not what we do. That's not our market. But where there are unique niches, that's where there's opportunities. And that's where we find ourselves. If you think about UAS systems, and certainly that's a growth area, and an area that is still largely fragmented, undefined in terms of how that's going to actually be deployed. One great thing about aerospace, you see that the migration always happens. Aerospace technologies always start from a military application, then migrate to civil applications. So balloons used to be used for military observation, then they moved to commercial. The first fixed wing, military, commercial. Rotorcraft, military, commercial. UAS systems, where are they now? Military. Where are they going to go? Commercial. Unique opportunity in terms of being positioned in a growing, fragmented, undefined market. And I would say, I don't know that much about SpaceX, but the commercialization of space, similarly, is a unique opportunity to actually carve a niche and become the OEM, the next Boeing, the next Airbus of this particular market to the degree that there's differentiation. One thing that strategics have a hard time doing is stepping away from their core. They have a core technology that gets them to where they are, gets them the returns, and essentially is their reason to be. And so strategics, large strategics specifically, have a hard time getting outside their core. One way that they do that is to buy other companies. Smaller companies are buying into technologies or markets that they don't exist in. A smaller, mid-sized company, certainly positioned in a fragmented market, has the opportunity to essentially migrate and change its core to meet the market need or actually define the market need. And that's what I think is so exciting about how we're positioned right now in terms of just UAS systems in general.
This question will be directed to Courtney, but I think Adam can also chime in. You mentioned in your presentation about trying to expand access and use of the International Space Station and other space platforms. I know and speak to many people in medical research, biotech, materials. I talk to them about what they could do in microgravity, and most of them, A, don't have a clue, and B, even if they did have a clue, wouldn't have a clue how to actually use the facilities we have there. Obviously, some people are using it, but obviously that community is not broad, it's not worldwide, it's not widely known. can you tell us a little something about how you might go about changing that?
One of the things that, like I said, one of NASA's goals is the fullest commercial use of space, and the ISS as a national lab is kind of an unprecedented opportunity in that we do have, for the first time, a fully operational manned facility on orbit that can do microgravity research, and there's a number of different facilities that are up there. We have extensive information on our website that explains everything from sort of the size constraints to the power supplies that are available, whether you can transport living objects, whether you want to send materials up. We have interesting, we have magnetic bottles that can hold stuff, so you can actually grow crystals or proteins in space without them being in contact with any actual material. And we have people up there who can actually help things go along and track that. Where we really are now is we've partnered with a number of other government agencies and also research institutions to do a lot of fundamental research. Because the thing is that there's a lot we don't know about what happens in microgravity for very basic things like how do viruses react when they're in a microgravity environment. And, sometimes it looks kind of funny. I don't know if you've seen the videos of butterflies. They brought chrysalises up and they said, what happens if you grow butterflies in space? Do they fly upside down or, something like that? But those things can help you answer important questions later. And a couple of the big things that we're working on right now is that we actually look like we are working with a partner to develop a MRSA vaccine, which could save countless lives every year. That could address that infection and, that in staph infections as well. And so it's because viruses have a particular response to being in a microgravity environment that allows you to actually run experiments much faster than you can. So you can get several years worth of research out of a couple of months on station. And as long as we have the ability to do up mass and down mass, we can go ahead and cycle those things through. And we've developed a standardized container for experiments that essentially plugs into a rack, and SpaceX carries those racks, they're from a company called NanoRacks, up and down. They do student experiments, they do scientific experiments, they do commercial experiments. And we're also working with folks like DARPA, which sponsors the SPHERES program, which is an array of small spheres that fly in formation. And so you can actually look at maybe having modular satellite arrays, and you can actually fly those around on station and test them out. So it's a way to actually see how something works in the environment. There are attachment points on the outside trusses. So if you're interested in how your particular component would stand up to radiation in space or the heating and cooling associated with being on orbit, you can use that. So we have an organization that's called CASIS, and they're responsible for organizing that and actually working with researchers to do that. So they're the front door to the ISS National Lab. I have no idea if that answered your question, but the thing is that people just need to try stuff, which is why, like I said, this opportunity is available at no cost. NASA funds all of the cost of the launch, all of the on-orbit resources, and then getting it back down to the researcher.
Great. In the interest of time, I see two hands, and Jacob has a third question. So why don't we cover those three questions, and then we're going to wrap it up. So either... Sure.
I just had two quick questions. For Courtney, say you have an idea and you want to get it onto ISS. What's the time frame from the point when you make contact with NASA until you actually have it flying on the ISS?
I can't give you a direct answer to that. What happens is that the research is actually mapped against available resources on station. So if you need a particular cabinet that's not going to be available for a year because someone else is using it, you'll get swapped out and put in line. So there's a prioritization as far as the research goes, and then there's prioritization, and you map that against the available resources. You map that against the launch schedule, and you map it against the crew time that's available, and then you know what your schedule is going to be. SpaceX is flying. You guys are going to be flying 3 times a year, I think. Right. Doing rotations, and so that's essentially going to be our upmass capability. We actually have the ability to do more upmass than we've got scheduled right now, so we have empty slots, and we're just looking for folks who want to use them.
Just from what I've heard around the industry, the easy answer to your question is if you have 2 years, that's pretty reasonable. If you have 3 to 6 months, it can be done, but it's a lot of work to get there. So to get an experiment onto a station.
Okay, depending on how the details work out.
Correct, and it's the things you would expect. Safety, folks have to look at all these things about whether your particular experiment interferes with anything else, whether there's astronauts on board who have time to manipulate whatever the experiment is. Lots of resource constraints.
Yeah, and depending on what your need is, the Flight Opportunities Program is also, that's where we'll do microgravity flights on a suborbital vehicle. So you get 7 or 8 minutes of microgravity time to do testing and that sort of thing to make sure that you're actually ready to go into a full microgravity environment. So if you're at a low technology readiness level, you can actually advance that level and get up to maybe the 5-6 level, which is where you want to be before you get on station.
And maybe one non sequitur story of the butterflies keyed in my mind. Don Pettit was one of the astronauts on board space station. He came and told us a story of they had a spider that made it up there, and they said for the first 3 or 4 days, the spider tried to make a web in zero gravity, and it was just this crazy nonsense sort of looking thing. But then after 4 or 5 days, it figured out what was up and what was down and made a regular spider web. So there are odd things that go on in microgravity and pharmaceuticals, crystal growth and those kind of things. I think there are opportunities there for people to think about. And NASA provides a great service by getting things up there for free, quite expensive otherwise, but that's an opportunity others should take advantage of.
Yeah, the other quick question I had was for Aurora. We were just talking about aerospace exits before, and since you have such an expertise in UAS systems, I was just curious, has Grumman looked at acquiring Aurora by chance?
How much money do you have?
Yeah, I think I think some of the unique challenges, and I think Laurence talked about it. You have a valuation challenge in terms of what you think you're worth versus what somebody else thinks you're worth.
Okay.
But certainly strategics are a logical part. We have great partners that are large strategics, and actually they have been part of the capital structure in the past, and so that's something that's a logical exit for us, and we value the current relationships that we have on both a non-capital basis as well as the opportunities to have additional capital come in.
This is for several of you, if you can answer it. The government's the big strategic partner, but the government usually imposes 2 constraints. One that you've touched on, which is export controls. It's ITAR control instead of commerce. And the other is the government wants a hefty chunk of the intellectual property, which they didn't ask for when they awarded the Wright brothers the Army Signal Corps contract. And NASA doesn't do this so much, but a few years ago, GAO came out with a report complaining that the DoD wasn't getting enough intellectual property rights, and there's a tremendous move now to rewrite the applicable regs so that the DoD will get more and more intellectual property rights, which is going to make it harder for small startups to turn around and say, well, we started with the government, but we no longer have the intellectual property rights. Can you address some of that, and can you also mention just why companies would prefer to be under an SBIR program as a result? Because SBIR rights are much more generous.
They are, and and that goes to one of the comments I made when I was at the podium, is that when you go into the SBIR program, you are making a decision as to whether you want to be a NASA contractor or not, and what kind of NASA contractor you might want to be, because the intellectual property issues are different depending on when you come into the government in your product development cycle. And the intellectual property question is actually one that we're struggling quite a bit with now on the ISS side, because we want to bring people on, and how do we do that and make sure they retain all of the rights, because there's really no NASA interest in the research that's being done on the station. However, it's being conducted in a government facility, and there are rules and laws that apply to that type of work. And so what we're doing, and we actually had to work with SpaceX on that too, because when NASA acts as an investor, we want the company to be commercially successful. It's not of interest. We don't want what they have. We want them to go out and leverage the investment that we've made in them and have a business that then we can buy from them to get those services. And so we've been able to negotiate where, let's say, if the government has rights in something, the government forbears exercising those rights for a period of time. Very similar to the SBIR type model, which gives the government purpose the more limited rights for a period of 5 years under SBIRs. So to extend that to, just because you have the rights doesn't mean you have to use them. So that's where we've sort of navigated around the letter of the law to get to actually achieving the type of mission that we want. But it is a dialogue that we have very often with the staffers on our oversight committees, because they're as interested in how we're working with the commercial aerospace sector as we are, and they want to help make those folks successful as well. So
you're not going to be moving in the same direction the DoD is right now?
At this, I'd know about it if we were, and we're not, that I'm aware of.
And we've had a lot of success in cooperative research and development agreements with our government customers. They jointly funded the development of new devices for what's now our fastest growing part of our business, the short packetized data for tracking everything under the sun. Half of our business out there now is coming out of that. Also, they helped us fund a initial capability for a global push-to-talk tactical radio capability over satellite. So this is something that they needed very quickly for the Middle East and for Afghanistan, where they didn't have a communication solution. We got something in the field, and now it's a significant part of their business. We're commercializing it now for public safety and other purposes. So we haven't found that as an issue.
Actually, if I could follow up on that, and this is my experience transitioning from the private sector, because I was in private practice for about 12 years before I came to NASA 6 years ago, is that there's a lot of paranoia about intellectual property rights. And I'm really glad for your comments, because the thing is that the question is not whether someone has intellectual property rights. And people will come to us and be like, oh, no one will invest in us if you have rights in our intellectual property. Well, the government's not in the business of commercializing technology. We give our technology to other people to commercialize. We call it tech transfer. So simply the goal is the government does not want to be sole sourced in an area that it invested in developing. So it's mostly a mechanism that if you guys go out of business and DOD, by God, needs some more of that stuff, that they can get it. Because I'm not aware that that the government's ever exercised march-in rights to stand up another company. The closest I've ever seen is with the anthrax vaccine, because the people who had that technology couldn't meet the demand, and they worked out to farm it out to another company, so the government never had to step in on that patent. But I'm not aware that the government's ever taken anyone's IP, and that, that I think it's more of a little bit of hand-waving and a myth that it somehow impairs the commercial viability of your organization if the government has these rights on paper as a result of their investment.
And we were a little different, right? We said if the government wants to go out and build 66 satellites, launch them in orbit on the same waveform that we're using to do this, they can go ahead and do that, because it's, they're never going to happen. It's never going to happen in our lifetime. So we had a unique network that system had, whatever they paid for, had to develop on. But they had the rights to go to other manufacturers to develop it, and that's fine. It all helps us. So.
But it's so easy to buy it from you if you already offer it.
That's
right. I mean, that's the thing.
They're our biggest customers. So
yeah.
we wanted them, we're just looking at a win-win situation. It was very easy to deal with, and it wasn't any issues, so very successful.
And a finale.
We're trying to get out of here, so I'll make it quick. On the back to the partnership, just for a moment, curious about your thoughts, perhaps both from the corporate and the investor standpoint, on the role of large aerospace defense companies as investors. I was speaking to a venture capital individual a while ago who was saying, who was reminding me there's a lot of the major Northrop Sikorskys of the world, maybe not necessarily Sikorskys, have actually set up venture capital organizations inside of them to try to go out and find interesting little companies and fund them. And they have been, by and large, remarkably unsuccessful. And so I just wanted to hear any thoughts from you on, any reactions to that. The other negative impression about large aerospace companies is, the typical story is that they go and they buy a little company that's really great, and then they immediately smother it with bureaucracy and, scale, and they destroy the innovation that they were going after. So, any thoughts?
That's my experience. Our partners that I've seen have been small, innovative companies building a business. They've gotten bought by defense contractors, and they get sucked into the bureaucracy of it. So it's unfortunate, right? They're buying this company for the innovation, for the kind of new way of doing business, and they kind of kill it in that process. I mean, one example is Honeywell. Honeywell had the single proprietary rights to the aviation market for the first Iridium. So they had the only set of avionics out there to work on the Iridium system in 2001 when we turned the network back on. They could have done a lot with that, just say, but they didn't. Right? They chose not to do that. We've got 40,000 aircraft now installed with Iridium devices, and Honeywell has less than, well, I won't say how, but very, very, very few. Okay, but they ended up buying a company that was one of our first partners, Sky Connect. You may be familiar with them when you looked at avionics, but small company in Maryland built a device. First just a yoke mount, so you could take an Iridium phone, slap it on your yoke of your aircraft, and communicate wherever you are. Then they started building avionics, and then they cornered the helicopter market in that because they had a solution for providing a very valuable service for the helicopter fleets. They were bought by EMS, kind of a mid-size aerospace company. EMS was bought by Honeywell. Guess for what reason? Because they wanted a way to get access to Iridium technology that they had, in the very beginning. So it's kind of strange. We'll see where that goes, but I can see them, that kind of culture that was this, flight startup company is getting pulled into the broader, what has to happen in the aerospace. This is a company building flight safety avionics. It creates a culture that does things to small startup companies.
If I could make one closing pitch, because I haven't had a chance to mention this, but one of the features of NASA's SBIR program is a mentor program. And the mentor program actually connects small businesses with our large contractors and tries to develop those relationships, because NASA's contracts have small business set-aside goals. And one of the things that large contractors need is contacts with small businesses that they can partner with and putting their proposals in to help them meet those small business goals on those contracts. And so that's a benefit that being as part of our SBIR program does offer you if you're interested in working with some of those larger guys and making those connections, because I think it can be hard to break into the industry and be part of a proposal team to go after some of those larger NASA contracts. So I just wanted to let people know that that was available to you if you wanted to look into that as well.
If I may add a comment to try to answer your question from the perspective of a large company. Let's see. Of course, we recognize that there is entrepreneurship, innovation in young ventures out there. And as a company, we've reached out to small companies via open innovation initiatives like starting an entrepreneurial challenge to try to identify companies that are working on transformational technologies and products that could be relevant to us, whether it's about the technology, whether it's about opening new markets. And we are experimenting with this. We have concluded our second entrepreneurial challenge. We'll be announcing over the next few months the winners of that. But basically the prize is about incubation support. We're trying to find ways to collaborate with young ventures and with the hope that we can mature relationships with them. It's unclear whether that relationship is about investing in them, doing an equity investment, becoming or doing something maybe similar to a VC with completely different interests, in that our financial returns are more likely to come and move the needle for a company like us through M&A or basically setting up a new P&L, et cetera. But there are strategic reasons why we might be interested in doing that, whether it's about the talent, whether it's about accessing new markets and experimenting there, whether it's about tapping into technology that we might not have had a chance to develop in-house for a variety of reasons. And I'm glad to see Konstantin, who's here, who's actually honorable mention for our first challenge that was launched in February 2012. So there are ways by which I think large companies are trying to work with smaller companies, whether it's about suppliers or various contracts, whether it's about partnering in research. there's a challenge around impedance mismatch, if I can use some engineering terms here. But I think there, hopefully ways that we can identify that would bring value mutually.
Remember, in many parts of the aerospace industry, right? If you want to get on a helicopter, you have to work with Sikorsky or Boeing, right? To get in the cockpit of an aircraft, you're going to be working with Rockwell or Honeywell. If you want to work on an engine, you've got Pratt & Whitney or GE or Rolls-Royce. So it's because that's the nature of the industry. You don't want, and none of us who fly want to have someone putting something into a plane that's not gone through a very thorough process. So it's, I don't want to make it sound like these large companies will kill it because they like killing small companies. It's because they have to some degree, have a culture that's been put in place and a process to support what they do. It's tough stuff that they do in a non-forgiving environment. So, there's a good mix, and programs like that. I mean, that Laurence was talking about, really, try to find a good balance between those two.
Well, with that, I would like to thank our panelists for a great discussion, and also to thank again our sponsors, Holland & Knight and Fitzpatrick & Hunt, and especially my peer, Stephen Tucker, who's been a tremendous asset in co-organizing this event. So thank you again, and we have the room until 8:30. Please do mingle, and we look forward to seeing you at a future event. Thank you.
Great.